On Tuesday, February the 16th, Jim Flaherty and his Department of Finance announced three major changes to the rules governing mortgages. They are the following. The first change is in regards to the rate used to qualify a borrower for their maximum mortgage amount. Currently, it's possible for a lender to qualify a borrower for a maximum mortgage amount using a low variable rate mortgage amount, the effective rate, which currently would be 2%, or in most cases, most prudent lenders would qualify based on the fixed 3-year, which is also lower than the fixed 5-year. And that has come under a lot of criticism because we know for a fact that in the future, interest rates will be higher. The second rule change instituted by the Department of Finance has to do with how much equity can be removed from your home. Currently, it's possible to refinance your home all the way up to 95% of the market value. The government has decided that it would be more prudent to encourage homeowners to save, and as such have limited that amount now only to 90%. The third and final change has to do with the minimum down payment requirement for a rental property. This is causing a lot of confusion, and I hear a lot of clients or potential buyers calling me already in the last 24 hours regarding this point. So currently it's possible to buy a rental property with only 5% down. The government wants to discourage real estate speculation, so they are now requiring a minimum down payment of 20%. However, that does not change the minimum 5% requirement currently needed to buy a primary residence. This is only for non-owner occupied rental properties. The down payment has now changed to 20%. So those were the three changes announced by the Department of Finance yesterday. And it's my personal opinion that the changes are for the better. I really don't see a big deal in requiring that borrowers now have to qualify using the fixed 5-year rate. It's a prudent decision, and it really won't cut that many people out of the market, and those that are getting cut out of the market, that small margin, really shouldn't be buying to begin with. The second change regarding the maximum equity that can be taken out, most lenders weren't requiring borrowers, or weren't allowing borrowers rather, to tap into 95%, so there's no real change there. And the third and final change regarding the down payment requirement for a rental property is actually a very good decision, because if and when the real estate market does turn, it's forcing investors to put more money into the equity, put more money where their mouth is, so that way when the market turns and values go down, they hold on to those properties and don't dump them. My name is Christopher Mulder. I am a Toronto mortgage broker. You can learn more about me and my business through my blog, sonofabroker.com, or my website, tridacmortgages.com.